No, I'm not. I'm leaving. And I'm messing with you this time around. All right. So hello, Vinki. How are you?
I'm doing well. How are you? I'm sorry I'm a few minutes late. I had my meetup today that just ended.
Yeah, no problem. I seen. It's funny because now like I learned something the other day, and I like it. It was about word hacks. And one of the things was it's probably Russell Brunson said on the podcast. He's like, one of the words you gotta change out of your vocabulary is say I'm sorry. It's like you say, oh, I'm sorry for being late. Like this, like now you get yourself like it brings sadness, it brings sorrow, it brings what's the name, right? Instead of saying, man, thank you for waiting for me coming, right? That brings gratitude and it started the meeting off good because of now you say, oh, I'm sorry. I'm like this, oh, don't be sorry. So like so that energy, sometimes I'm saying it's like, hey, thank you for waiting for me. This right here happened, right? I appreciate you waiting. So that it brings gratitude opposed to saying the sorrow.
Let me reiterate that I am super excited that you guys been waiting. Thank you so much for waiting for me. I'm here to join the party. Yes.
Yeah, let's do it. Let's do it. I
Positive
like it.
energy,
Energy.
positive energy. Thank
Yeah, let's
you.
do it, man. All right, so right now, so Vinki finna display a deal for us, all right? So Vinki have a deal that she has. She this is the virtual Shark Tank. She finna show her deal that she has, and she can present her deal to us. If it's still liking, feel free to reach out to her, invest in it. We're gonna analyze the deal, see the good, the bad, the ugly. We're gonna Shark Tank it out and make it great for us, right? So everybody ready for this? Are you ready for this?
Yeah.
Yes.
Let's do this. All right, you got the floor, Vinki.
All right. Thanks. Can you see this?
I can see it along.
All right.
Hold
Let
on a
me
second.
make this.
That looks familiar.
Yeah.
Hold on. Hold on.
How do I go to the slideshow from here? So have you guys, who said this looks familiar? Somebody has seen this deal before?
Yeah, Valerie has.
Valerie has?
Yeah.
Okay.
Go ahead.
So this deal is, this is just a legal disclaimer. Everybody knows that. Whatever I'm showing you, I'm not trying to sell you anything. I'm just sharing, pitching the deal. This is a 506C deal. So I'm okay to share with you if I do not have any pre-existing relationship with you. So this is our sponsor team. I'm partner with George Abro and Ash Shah, and we are working on this deal together. Its portfolio is 3 properties, 180 units. In why we pick Houston, everybody knows that. It's an emerging market doing really good, and there's an expansive population and job growth that we have seen. It's if you look at it, annualized growth is 2.5% growth in Houston versus 0.6 in US, and it has been considered the #1 largest metro population in Texas. And they say there's 2,000 new arrivals every week in Houston. A lot of people are moving there. And pretty lively city, Houston, and has been considered #1 in multiple areas. #1 or one of the 50 best cities to live in. And Rice University is there. Everybody knows that. How hard is it to get into Rice? And they have a good hospital with their expanding and more jobs are coming in. And previously, historically, I would say people, whenever, at least I used to think, a lot of people, when you talk about Texas, everybody thinks, oh, it's oil and gas. Mostly there's oil and gas industry, and that's the reason it's flourishing. But if we look at the analysis, we'll see so many other industries are there. Oil and gas is only 2.7%. And rest is the other industries, whether it's a financial, construction, or manufacturing, they're contributing to the economy big time. Best place to work again has been #1 in multiple areas, in the highest average starting salaries and best state for women entrepreneurs, and also highest annual median wage for the STEM workers, highest job growth. So multiple factors that's making Houston more lucrative place to invest in. And it has been also the #1 state for businesses for last 14 consecutive years. That's the reason we thought Houston is a good market to invest in. And there's a Texas Medical Center, the TMC, and they're expanding big time. They're adding 23,000 more jobs. They're going to be spending 5.4 billion to expand on the expansion. And also there is A&M University. They're building and they're putting 546 million in the complex as well. So they have already started the work. It's expected to complete in 2022, which is gonna be more promising for the people or the investors, right? And that's this TMC Center, the medical center, this is very close to all the three properties to the portfolio that we got, and which makes it desirable for people to live, right? Because they need a place to live when they're gonna find a job at the medical center. And also, I mean, if we look at the oil industries, they are expanding their footprint as well. Exxon is spending or investing $2 billion to expand, and their operations expected to begin in 2022. And similar with the other industries, they're creating more jobs, and I think they're gonna be adding 2,000 more jobs by 2023. So all these things make this place very, very desirable. And how about the COVID? How did we handle COVID in Houston? And I'm pretty sure a lot of you are in the Texas area, and then you know how you have very less barriers, not like California. When California, we're still in the lockdown stage. And then even after getting my COVID vaccination, I still have to wear my mask if I go out. We are still not meeting with people. We are still not having parties, no social gatherings, no lunches, no dinners so far for us. But versus Houston, you guys are doing great in COVID, you know, it's like on the decline now. And I see you guys are already partying, right? Whenever I talk to people, they're hanging out. And you are, you know, and Houston is pretty strong during the COVID times too. And the rent's been pretty solid when we did the rent analysis. And this is the simple analysis that we did. And I put a little graph over here. It's going pretty strong during the COVID timings too. So that makes it more promising for us from the investing perspective that this is a good market. And when we look at the average rent in Houston, in August 2020, the average rent for an apartment in Houston was 1,389, which is a 4.32% increase from the last year. And remember, we are in the COVID, but still there's an increase in rent, and there is 3.5% increase in one bedroom from the last year, and also 5.11% for two bedroom. So it means there's not decline in rent. That makes it another indication for a strong market. So why I should invest? What makes it a good deal? Because for this particular deal, I'm partnering with GNT Construction, and they have a strong track record. So if you look at these properties, couple pictures over here, you can see before and after how the properties were before and how they made it look so nice and very appealing to the tenants. And that's the reason I wanted to, I would say that's the reason you should be investing with us, with our strong team. And the more reason to invest in this deal is because we are getting into this deal at a very low basis, around 40K per door, where the minimum is about 50K per door in Houston. And that makes this deal very, very strong. And like I mentioned, our team is very strong because we do have the construction or the general contractor in-house. And the other value add for the true value add for this deal is because the properties, couple properties, especially the Ventana Garden, they are in an area where there are A properties across the street, I think two of them on both sides. And these properties have the potential to go to B minus. So you can think these are class C properties, but with the potential to go B minus. So there's a huge delta that needs to be realized, and that makes this deal even stronger. What is the business plan? Our business plan is, let me go there. So we'll be increasing the net operating income by increasing the rent. Like I said, the properties has the potential to go to B minus. There's a huge delta, and we'll be able to increase the rents. And we're gonna be recovering the utility expenses through RUBS because we're gonna be billing back some of the utilities. And also we're gonna be investing in the Energy Star appliances and fixtures to reduce some of the consumption. And also payroll expense will be controlled through the use of technology because we have this smart home technology available now. Since we're gonna be renovating and upgrading the units, so we're gonna be try to leverage some of that so that we can have the better control or also the better rent increases as well. The technology investments will also reduce the insurance costs because when you're using the technology, upgrading the units is going to bring down some of the insurance costs, and which is kind of add on to our income. Some of the repositioning plans, we're going to be converting the offices back to units because there are a couple offices, some spaces that's being used as an office. So we're going to convert it back to units and rent them. That's going to increase the NOI. And again, we're going to reduce the expenses because we're going to share the staff because all the three properties are in a closer vicinity. They're like 15, 20 minutes drive from each other. So we think we can share the staff. We do not need to hire dedicated people on each place or each site. Ventana, possible sale of Ventana is a unique property and because it has a parcel of land. So we haven't 100% decided what we wanted to do with it. First, we were thinking maybe we can put some storage units in there. But I think we're thinking we might be able to cut that lot and sell it. That's gonna be additional income. And some upgrades gonna happen at the exterior and interior level. Also, more amenities gonna be added to increase the rent. And we're gonna be going green. So we're gonna be installing some water saving fixtures and energy efficient lights. Some management efficiencies, we're gonna have property management staff float between the properties. We do not have to have a dedicated staff, like I mentioned, because they are in the closer vicinity in the drivable distance and should be easily managed. And we'll also use the property management technology as an advantage to, and also that will bring us some payroll reduction when we are trying to manage the property management company, like in a shared kind of environment versus having the dedicated force. Some of the investor returns on this particular portfolio, we are projecting that our returns is gonna be cash on cash between 10 to 12% with an IRR 21 to 24%. So this is 80-20 straight split that we do not have any hurdles because we think it's a cash flowing property. So it should be easy to have simple straight 80-20 split so we can give maximum back to investors. The minimum investment is 50,000. The projected term is 5 years, and the equity raise is 3.4 million with the equity multiple that we're giving back is going to be 2 times, so more than 2 times. 3 unique locations. This is the location for the Ventana Garden, and this is 84 units. And now if you can see in the map is right here, and the next property is Meadowlea, 46 units, they are next to each other. And the third one is Gramcrest, that's 24 minutes drive, that's next to the Hobby Airport, if I'm saying the name right. And this is a little bit more details on the Ventana Gardens apartment building. It's 84 units, it has 7 buildings, it has 42 one-bedroom, one-bath units, which is 600 square feet. It has 42 two-bedroom, one-bath, 900 square feet units, and it's built in 1964. It has an on-site laundry, 2-story buildings, and it is 85% occupied. It's a little map over here. It's 8 miles from the downtown Houston, 12 miles from the TMC, the medical center I was talking earlier, and it's 6 miles from Rice, and close to the Galleria uptown as well. Some of the comps, if you can see over here, this is the Ventana, it's 1964 vintage, 84 units. And if you see, the 1-bedroom rent is $810, and then 2-bedroom is $913. And then there are some of the comparables over here. If you can see that the some rent is around $1,000, and some of the demographics over here a little bit more. The population in 1 mile, 5 mile, or 10-mile radius. And this is some of the pictures of the Ventana Garden, how it looks now. This is the Medalia Apartments, it's 46 units, 8 buildings. It's 12 2-bedrooms and 34 3-bedrooms, 1962 vintage, on-site laundry, and 91% occupied. Some map closer to Houston Community College. In some of the aerial view, you can see the businesses are closer to it as well. And even the North Line rail is closer to it. It's about 10 minutes commute to the downtown with the rail. So there is some comps for the Medalia as well over here. And then let me see if I can see over here. So go next, there's a few pictures. And there's Graham Crest. It's 50 units, 2 buildings. There's 2 studios, 34 1-bedroom, 14 2-bedroom, 1973 vintage, again, on-site laundry, 2-story buildings, and 86% occupied. So it's only a few minutes from the Hobby Airport. Some aerial view. And some comps here, the rent comps here again. In some pictures. So here is the pro forma for the investor. This is the 5-year projections that we look at it. And then we have the DSCR is a 1.9 starting from year 1. But if we go into year 5, it's gonna be 2.83%. And then if we look at the total income, it's increasing over the years. And let me see if I have the investor side of it slide. So here it shows the returns at a glance. The unlevered IRR shows 11.6, but levered IRR is 25.9. And same with the equity multiple, it's gonna be 2.83. And this is going very conservative. That's the kind of numbers that you're seeing on these properties, like I mentioned, because we are going in at very low basis, like around 40K per door, where the minimum, I think in Houston is about 50K. So these are, the returns are pretty good. Even the unlevered is pretty strong. And then the next steps are, how do we invest? If you are interested, please reach out. And if you have any questions, I'll help you with that. So this is it.
Yeah, thank you for sharing. You did it. Yeah, good stuff. Good stuff.
Thank
All right.
you.
So if anybody, I guess first, Matt, if you got some questions, but if anybody got any questions, feel free to unmute themselves and ask any questions about her deal. You go first, Matt?
Oh, sure. That was a great presentation, and great job, Vinki. It's courageous to go first, nonetheless. So just, I know how it feels to be in that hot seat. So good job. Some real positive things. You talked about systems and tech, and how you were going to manage better through the payroll softwares. I thought those are really good points. Your team has, because you flashed it on the screen, has a really strong resume. I see MBA. There's some really strong. Your credentials are very strong. I would probably focus on that a little bit more in your presentation, because investors want to know who they're investing with, and that's equally as important as the facts of the property. So those are some feedback tips. The biggest questions I have are probably the most basic ones, and sometimes I might have just missed them. I don't know. But what is the purchase price of the property? How much is the budget that is the renovation budget? And then what do you expect the stabilized market value to be after you've got at least up to a 90% occupancy?
I think I do not have those slides here, but the purchase price is around 10 million, and we're raising 3.3 million. So that put us as the capitalization of 13.3 or 30.5 million. And I think the exit, if I recall the numbers, is gonna go, we're looking at 6.5 cap rate, which will put us around 27 or 25 around that one. If I have the numbers correct, but I can share those numbers with you as well. Let me look it up real quick. That was a good question. I missed that slide. Thanks for telling me. I should have added that slide in there.
That was my question as well, the purchase price and the cap rate.
If you don't mind feedback on that, I would make that your very first slide, because you want to capture attention right away. Look, we're going to buy it for 10 million. We're going to invest X amount of dollars. It's going to be worth 25 million when it's done. All right, you got my attention, right? It's in a stable market. Okay, now those are the things that you want to lead with, so people will be interested in all the rest of it. But
no, thank you so much. I really like this feedback. This is my first time presenting, but I love the feedback. So I'm gonna be adding those in here.
It was a good presentation, though. It was definitely a good presentation. Did you just use PowerPoint, or was there a template for the?
Oh, it's a PowerPoint.
PowerPoint, okay.
Let's see. I made a bunch of notes. You want to hear all of them?
Yes, please. I will love that, because that's gonna help me improvise.
I mean, I have specific deal questions, but I mean, from a pitch perspective, I'll give you a few tips, and I hope you don't take these as criticism at all.
No, please go ahead, and then ask me the questions too that you have, so I can answer those.
I will. Most places that will allow you to come pitch give you an 8-minute time frame.
Okay.
So usually do it in a format because there's lots of places that are like Shark Tank where you can come pitch, and they give you 8 minutes to talk, and then they get the audience 8 minutes to ask questions. And so you've got it's total 16 minutes. So it's tough because you got to do things very succinct and get your point across, in a pretty fast way. Yours wasn't much longer than 8 minutes, so it's not a critique. I just wanted to let you know that is a standard time frame for pitches for some reason. I would lead with a hook right up front. Give them a reason right up front why they should listen to the rest of the presentation. It could be the return. It could be, hey, we're buying this. A lot of times it's the deal, right? Hey, this is a $12 million asset, but we're buying it for $10 million. That means you're getting $2 million in equity on day one.
Mm-hmm.
That entices, and that's okay. Let me hear what this rest of the story is about this. And I think whatever that great attribute of your deal should go right up front, I would suggest.
Yeah, no, definitely. I will add that. Definitely, that I really like that. I don't know why I missed that. What I was thinking that I did add that slide, the purchase price and the sale price. I should have added that.
No, it's I know. It's fine.
That's how you learn, right? I guess.
Absolutely. And like I said, I hope I don't come across as critical.
No, it's all good. I'm gonna add it right now here.
One thing that confused me in the presentation was
you are a shark. You gotta do it. It's a shark.
You showed,
yeah, exactly. Yeah.
No guppy tank. It's not a guppy tank.
you showed non-levered returns, but you're planning to get a loan because of the amount of capital you're raising. It just adds a level of confusion. It made me ask, okay, are you getting a loan or are you not getting a loan? Because it showed it with unlevered and a levered return. I would just pick the one that's going to be applicable to the way that you're going to manage it. And that'll, I mean, that's a minor thing, super minor thing. But in sales, a confused mind says no. So you want to leave no opportunity to confuse anybody about it. It's better to say nothing about something than to confuse somebody. You know, let them, you can dig into the details once they're interested, I would suggest, in some of that cases. But excellent presentation. You presented it well. The slide decks are very complete. You talked about the market in a big way. And I think that that's really important in a lot of ways. I have some specific questions about the project, if you don't mind.
Yeah, please go ahead.
Did you say there are 2,000 new arrivals in Houston a month?
Yes.
That's incredible, by the way. You know what would be really interesting to augment that on that study is how many permits are turning into certificate of or occupancy is what we call it, certificate of occupancy when a building's built. Somebody has to be building 2,000 new houses or apartment buildings every month, or you know, or that's going to become oversupplied. So that's an interesting, that tells the rest of the story of that statistic, right? 2,000 people coming in a month and they're building 3,000 homes a month. You got a problem coming soon. 2,000 people coming a month and you're building 1,000 units a month. Your growth is probably going to slow down eventually because it's not going to be sustainable. So in order to tell the rest of the story, you have to put that second piece of information on there.
I like that. Thank you so much.
And it can be a little positive.
Yeah.
You know?
I like that point. Yes.
Just a couple things to think about. I don't necessarily need the answers to be honest, but one thing that people always want to say is a value add is the rubs. And one of the things that I've learned the hard way in one particular case was, you know, if all the neighbors don't have rubs and you do, they'll just rent where it's cheaper. So rubs are good, but you then need to take the rent plus the rubs and compare that to, you know, what the total cost to live somewhere else would be. Because at the end of the day, they're just people like you and me wandering around the property and going, it feels nice here, I can afford it, you know, and that's it. And that's what you need to present them with. So rubs are kind of an interesting thing because you can show a lower rent and bring people in, and then spring them with, oh yeah, there's an extra $150 on top of that for your utilities. So it's a good marketing strategy to get people in. Rubs are also good when they have a lot of what I'll say, illegal immigrant populations, because they don't have a social security number to apply for utilities and things like that. So there's the caution side of your tenant base when you have rubs as well. So look at the neighbors. If the neighbors are all doing rubs and your rents are going to be competitive, great value add. Just be cautious that it's not always a value add.
That's true. But on the rubs, I can say for this one, I have an answer for you, because this is in the area where there's Class A properties across the street. So these are Class C. So it has the potential to go B-. I'm thinking rubs is good in this case. So
Yeah.
it might work.
Very common in Texas. Other markets, it's not as common to do rubs, but and so it's not always a universal application. I guess is what I love the fact that you have that extra lot on the side. I mean, you could sell them off. You could you know, put in you know, those Connex big steel boxes and sell, lease them as storage. Those boxes they give them away most of the time. Like they're trying to get rid of them in some cases. So you can like make a whole storage yard with stuff like very inexpensively if you wanted to not do a development project. But that's a huge bonus. I mean, I think that's a great piece of that deal.
That's true. And then plus if we get to, you know, kind of get a zone or get that parcel out, we can sell the parcel as is without doing anything with it. I mean, that's what we're thinking at this point, maybe.
That's a great option. I wrote down a different question about that. And that is the loan that you are going to get, is it cross collateralizing all three of the separate properties? And if so, is there a clause in the loan so you can, each property is apportioned to a certain amount of a payoff? So if you wanted to sell one property out of the three or two out of the three, you know, as time goes on, or does the loan cross collateralize and keep all those three properties tied together?
You know what, that's a really good question. And I do not know the answer to that. And I have to ask that question to figure out the answer for myself.
Vinki, it's better you're learning it now. I learned it after I bought the property. That's a true story.
Yeah, no, I'll find out that answer. That's a good question. Because I was just thinking maybe it's not, maybe it is collateral, maybe not. So I don't want to answer it because I'm not 100% sure on that.
Mhm.
I'm just going to make sure that I understand that 100%.
I would encourage you and your partner team to negotiate for that. It just gives you an extra option for exit strategy. You know, maybe one of the three is performing really well and you can make a ton of money on it, you know, but the other two are not performing as well. And you know, you don't want to sell them at the low price. So, you know, you want to be able to have as much flexibility as possible. Faye, great job. That's all. I mean, that was fantastic. That's what I got for you.
Thank you. Thank you. I appreciate all your feedback and I will definitely incorporate that in my presentation and also brush up my skill set, the presentation skill sets.
I didn't say anything about that. I think you did a very good job presenting.
Thank you. Appreciate it.
Yes, thank you, Vinki. That was really, really brave. I know I just called you like last minute. Hey, say, can you bring that property? So thank you. Thank you for doing it for all of us. I really appreciate it. You did a great job.
Yeah, thank you.
Okay, Flora asked the address of the property.
I think we have.
I guess you have a couple questions in the chat, but either you can mute yourself or you can ask a question yourself.
Let me see. Hold on.
Sandra said, Matt said has it all the right things? Where the numbers come from? It helps to show the data. Matt nailed it. What's the address of the property? Yeah.
I do have the addresses of the property. I do not have the address listed in the presentation. And you're saying the data where I got it from is usually listed on the slides where I'm quoting from, whether it's a work or population, how we say they're number one in something, or where you know, we are collecting the market data. And I do have listed in there too, like we're getting from the maybe Wall Street, from U-Haul for the rice, for example, the Princeton Review, or Langston, or the Brookings Institute. So different places we are gathering the data to figure out the market.
I agree with you, Vinki. But the only thing I would say is when it came down to Matt, right? I think he asked some great questions. I think starting from the numbers, where I was coming from when it came down to where did the numbers come from, right? I was asking that purely based on, because I've been in sales and marketing for like over 20 years now. And the first thing that everybody wants to do is to give them a supporting answer, like in terms of this is where we got it from, and you just put it up there. The next thing that he really, where I said, Matt just nailed it, it was about how do you know how many of the illegal immigrants are there? Because that was something that is a very relevant thing, because one thing that everybody should be aware of is like you are responsible for your investors. And every single time when something goes wrong, you have to tell them what happens. And I always say that negative publicity goes faster than anything that's positive. So that's why I said Matt just was hitting on every single thing to the point. Like he was like, bam, bam, bam. It's like, you know, why do you say this? Why did you do that? Why? So it was awesome watching Matt just asking those questions. And Cornelius asked that question, you on that Shark Tank thing? Yeah, Matt, you need to be there because you really know how to ask these questions. It was amazing. Thank you so much. And
So
you did a fantastic job of doing the presentation. As Valerie said, you know, it takes a lot of courage to be the first and come in and say all these things. It's awesome. So thank you so much for doing that. And we learned a lot today. So Cornelius, thank you for putting all this together. Matt, thank you for putting, you know, all that hard questions out there. And Vinki, thank you for answering that so openly and courageously. So thank you so very much.
yeah, of course. So Matt, you're Mr. Wonderful for me today.
Mr. Wonderful. You know, the reason I know those questions is because, you know, I sit in your seat often, and I've been doing it for 15 years. So I've pitched to Tech Coast Angels, which is one of the biggest angel groups in in the world, I guess, but it's located in California. If you're not familiar with it, you might want to approach them and see if they'll, sometimes they'll allow real estate deals, but they mostly do tech, and they have chapters. And where are you located at?
I'm in California,
What part?
in San Francisco, in the Bay Area.
Okay, huge tech, obviously. Tech Coast Angels, TCA. They meet every month. They do their own version of Shark Tank. I signed up with them. I learned about it by pitching there about, I don't know, 13 years ago. And and then when I was an accredited investor, because you have to be accredited to become a member of the club. By the way, it's a great model that if I started my company over today to raise capital, I would do it like this. They have a club that you pay $3,000 a year to be part of. And then they check your accreditation. You have to interview to get in, and it's very difficult. Like, you're not difficult, but it's a process, like a country club. And then once you're in, they bring in entrepreneurs every month, 3 or 4 a month, to pitch investment deals. And so you pay to see deals. And I've always thought, man, if I could set up a club like that, then I could have Vinki come in and pitch, and when Corneilous gets his deal, he comes in and pitches, and when I got deal, then we just have a club. It's a group, and I think that is a synergistic way to really create, unless as opposed to having a list of leads.
Yeah,
right?
exactly.
We're doing it. Here we go, and you just lead it.
But in California, I mean, especially the Bay Area where I live, because I'm close to Silicon Valley, we have so many incubators, and then we have so many angel investor forums. Then I used to go there too as a technologist, because being in the technology industry, to pitch our deals, for the startup. And this is all the angel investors sitting there and listening to your presentation, but it was nothing like Shark Tank. So, but this was a good exercise for me today to present it over here. First time my deal in front of you guys, to get your feedback, because it helps and also opens up some channels in your mind, like what the people or the investor side people like to see is like, because I'm doing something for them, is they do not need to necessarily have my glasses to see my deal, whether it's good or bad. They have to do their due diligence. And then I should be ready with all the answers or all the missing slides that I had. Apologize for that, for the missing slides.
And I didn't ever mean to suggest you were missing slides.
No, but I like that. Thank you so much.
So you've been to the incubators and then the angel forums and things like that. So you've probably seen a lot of this, this kind of thing go on. Those are great places to go. I mean, you're in a room,
Exactly.
even if you're not pitching, go network in that room. Obviously, they're all there because they have money to invest. Like, be in the back of the room, even if they don't let you pitch.
Yeah, the only dilemma is now, because due to COVID now, I'm not sure if they're having any Zoom meetings, because I'm not part of that network anymore.
Yeah.
Because there was live forum, so you can go in. Like, I'm a professor too, so as a professor, I'm invited to go anywhere basically. But with the Zoom meetings, and I'm not getting invited to a bunch of them, so I'm not even sure what's happening virtually, if they're having any meetings like that or no. So when you said you are doing that, so I was excited to learn from you. I mean, if you're doing something like that, I would love to connect with those people.
Absolutely.
So I have a question, Vinki, if you don't mind. I'm going to ask Mr. Wonderful Matt. So this is a learning platform that we have here. So, since we're in this group and we have the opportunity to have you, like you said, we really appreciate your feedback. Vinki, appreciate your, you're having to present, and we doing this, we are learning. So if it's okay, if I was going to ask Matt, if you were to present it and you got 8 minutes, so how would you, giving the details here, or maybe a property that you have in the past, be able to present it, and we could model from your presentation with like the energy, how do we do it, and like the whole package. And this is it. You have 8 minutes, and how are you going to do it? This is recorded, by the way, so we might put it on YouTube, so we'll be seeing you over and over again.
Sure. Well, if just from somebody had mentioned they were in sales and marketing their career, I think it was VJ, and he says you know, in sales and marketing, the first thing you need to do is just get attention, right? And so right up front, you want to hit them with the best thing about the whole idea. What's the big idea here? Hey, we're going to go in with an experienced contractor, buy a property below market value, renovate it, and make millions of dollars. Now you got my attention. Let's talk. Now we can talk about details and rubs and traffic patterns and all those kinds of things, right? This is what it is right up front. We're raising $3.5 million. Always have a deadline, even if you don't. Always. It needs to be, we need commitments by April 15th, and the funds have to be in by, because that's going to pre-qualify half your audience right out the door. And you know what? Save yourself some time and put that right up front. I need the money by May 1st, period. You know what I mean? Because you know, no sense in, if you're, especially if you're pitching one-on-one, you can calibrate that. But tell them what the time frame is. Tell them what the big idea is. The next thing you want to do is tell them something, one thing about you that makes you, demonstrates your capability to do the project, right? Vinki, I saw your resume briefly, and what it looked, I didn't take notes or anything like that, but it looked impressive. And so if you come out and say, hey, well, for example, so I'm a builder, I'm a developer, and usually what I'll say is my biggest project, hey, I raised $8 million to build a $50 million new construction custom homes in Newport Beach on the water with the largest private dock on the whole Western Seaboard. I don't have to tell them about 9 other projects, right? I don't have to tell them about all those other things. That demonstrates all that needs to happen there. And I think that you have a very strong resume with your team, it looked like. And I would put that really further up front too, because that's going to add a lot of credibility. I don't have a resume like yours. Stand on that. It's great. And then I would suggest again, purchase price, budget, how you came up with the budget. Honestly, your biggest risk in this whole thing is your contractor. So sell them hard. Why are they good? How do we know they'll complete the job? What happens if they don't? How long have they been in business, and what are their financial, backings? Because the truth is, contractors are the riskiest part of a construction project, period. So, you want to be able to reassure your investors that you have the capability to execute. And I'm not suggesting you don't. I'm just suggesting I would lean on those topics better, because I know what the investors are going to be. I know what their objections are going to be before they come out, right? Who's the contractor? I don't know. That's not a good answer. You have your contractor. He's partnered in, and sell them on why that contractor is the best choice. And I think that'll go a long ways. Most people already know the market in Houston, to be honest, and Texas is already known. You said it right up front. You guys already know that this hot market, I would probably not, I would send, one paragraph or one sentence about that, because it's a known factor. That's why you're there, right? It's the hottest market, hottest place in the world. Texas is booming. I mean, it's crazy. So, focus on what makes you unique, what makes your project unique, your idea, your systems, and your process. Because the truth is, when I started raising capital 15 years ago, I mean, my competition was like IRAs and, savings accounts and bonds that are paying 2%. That was my competitor. But now everyone's out teaching this, and everyone's out doing this, and there's lots of people trying to raise money in the same way. And so it's important that you distinguish yourself by doing at least just one thing different. Maybe you're the green renovator. Maybe maybe you guys have a special software that makes your management more efficient. But you want to come up with some kind of market strategy, some kind of angle that makes you stand apart from what other investment opportunities might be. Because I think if somebody wanted to go invest in a syndication in Southern Texas, they'd probably be able to find plenty of places to do that.
Yeah, very well said, man. That's great stuff.
Yeah, I really like that. I really like your strategy of differentiating yourself. I did not think about that. Oh,
Interesting.
I'll keep that in mind for next time, definitely.
Hey, it only took me 20 years to get here. Don't worry. You're getting a fast pass track right now.
Exactly,
If you
exactly.
could see where I was even 10 years ago, you'd probably all just laugh at me.
Exactly. They say, you know, with the technologies took us 100 years to get here today where we are. But the kind of technology that we have, it will take us only 5 years and it's going to be a whole new world. 5 years from now, we can't even fathom how it's going to look like, because unless we can only see up to a certain extent from the platform that we are, but we do not know what kind of wonders we're going to see in the next 5 years.
You're right about that. Don't bring that up in your pitch. You need to know exactly where you're going to be in 5 years.
Yeah, I know. But thank you so much for sharing your 20-year worth of knowledge. I really appreciate that.
Great job. And I appreciate you bringing that, because I learned something, and I think everybody learned something.
You did.
Thank you for sharing.
I think we all learned something. That was great.
That was
Are all
great.
these syndicated deals,
That was great.
5 years? That seems to be like a standard time frame.
Matt, the question is, why syndication is usually 5 years?
Oh, that's for me?
I'm sorry, I should have been more direct.
Yeah, I mean, Vinki could answer that because it's her deal. But the reality is, most commercial loans are 3, 5, or 7 year terms.
Okay.
And so if you get a 7-year loan and sell it in 5, there's an option for your buyer to buy it with assuming the financing. But other than that, the only thing I can think about is this. And if you buy a property with 25% down and it goes up 5% a year, in 5 years, you'll double your money. And I think that's why all the people teach it that way.
Okay.
You know what I mean? So 25% down, you're buying a $4 million property, $1 million down, $3 million loan. It goes up 5% a year. So 5% of 4 million is 50,000 a year. So it goes up 50,000, 100,000. It goes up $250,000 on your, I'm doing the math totally wrong on this, but I hope it's coming across right.
I got you.
5% a year of growth, but it's 5% on the 4 million. You know what I mean?
Right.
So 5% a year, all you have to do is go up 25%, match your down payment, and you double your money.
You double your money.
That's the secret of, that's the financing. That's the benefit of financing.
Okay, so that's not the same strategy you would apply then to if you were going to buy and hold. You would want a 30-year mortgage or a 20-year mortgage, or
if you can get them. HUD's the only one that's doing that I'm aware of. There might be other programs, but longer than 10 years in commercial is almost unheard of. However, I just did a HUD deal, a development project. It was a 40-year loan fixed at 3.15%, 40 years. I mean, that's like free money, especially with the kind of inflation we're about to face. They're not easy to get. But most commercial lenders are a lot shorter term than that. So they might have a 30-year amortization schedule, meaning it would take 30 years to pay off.
right.
But they'd have a balloon on them in 3, 5, or 7 years.
All right.
Sometimes 10.
Thank you. That really was information I needed.
The longer the loan term, usually what do we say? You can, the longer you're going to stay in it, they usually charge you more because, they want to get in, get their points and turn that money over. So a shorter term loan is less risky and less costly, less risky for them, therefore less costly for you.
Wouldn't a shorter term loan have higher interest rate?
Not necessarily. I mean, I'm sure there's cases where that might happen, but
You must be dealing with the interest only people. I had one deal like that with the interest only. And
yeah, I mean, that's a whole nother feature that's not usual. I mean, you can get interest only loans. Some lenders will do interest only for the first year, especially if you're showing a business plan that you're going to do renovations. Those are lenders will like that kind of stuff. But yeah, 5 years. I those are the only two reasons I can, because we did the same thing. I mean, I did 5-year deals for many, many years.
No, it's actually a lot more manageable and predictable when you do it that way. I mean, you can scale a lot more when you do in 5-year increments as opposed to trying to juggle 10, 30-year mortgages.
True. And I think also from an investor standpoint, 5 years is a long commitment. You know, the shorter commitment, the easier it's going to be to raise money for raise
Right.
money.
Like Vinki said, anything can happen in 5 years.
Precisely. And also anything can happen in their life. You know, if they're older, they're going to be thinking about their mortality, or their incapacity, perhaps their retirement. You know, if they're not sure where they're going to be in 5 years, that's a big commitment for them to make, for anybody to make. So I'd keep that offering as short as possible. And what we ended up doing after a while was making them shorter term deals where we'd say, especially on renovations, because we ended up selling we were planning to hold, you know, refinance and keep them, but when you see the millions of dollars on the table, it's like we'll sell it. You know, the hold doesn't look so good. And when you have investors, they're going to want to have a say about that. You know, let's take the money now and not, why would we wait 5 years? So what we would typically do is say in 2.5 years, we're going to look at the market indicators and we're going to make a decision on if we're going to refinance and hold it or we're going to sell it. And what that did is made the investors' commitment time shorter, because they would at least feel like they were going to have a say at that point in time on which way it was going to go. And how you structure, like, what is that, a vote? Are you the full executive decider? Like, all that stuff you make it up when you write your private placement memorandum. Those are the kinds of rules. You're building a rule book when you put together your private placement memorandum. Here's what's going to happen. Here's how it's going to go. If you guys decide you don't like me, here's how you can get rid of me. That needs to be in there. How they can vote you out. I've never had it happen, but you need, you got to have remedies, or else people are not going to feel like they have a say, and therefore aren't going to give you the money. So just little stuff like that.
All right, and that answers the question I have from last night as well about the time frame that you give investors. Now I understand why that 5 year time frame keeps coming up after what you explained to me, which is what I was trying to get to last night, but I guess I just really wasn't expressing myself very clearly. But now that answers that question. That's why it's about 5 years.
Yeah. Yep. Well, one last thing I'll say about loans, and this is probably one of the things that scares people the most about getting into commercial real estate, is you don't have to qualify your own loans. Like I shared earlier today, when I first went into Texas, I had a property management company qualify my loans, or the owner of the property management company, because lenders wanted to see local experience. And so I would bring them in and do that. So the cool thing about this is, and I have another guy, a good friend of mine, and he qualifies or comes in and co-qualifies a lot of my deals, partly because I want him in the deals because he's a good advisor, partly because he's got a good resume. It helps us get better qualified loans than I can get on my own. And, it's worth giving a guy 5%, 10% of a deal if you can come in and get you a great interest rate, do the loan process, and qualify all that stuff. So if that shouldn't be a deterrent. Commercial real estate is way easier than single family real estate for these reasons. It's okay. The lenders are okay with you bringing in a team of people to qualify for something. That's typical. So it's not typical in single family, and they want to have more of an independent individual perspective on your financial situation before they make you a loan. So it's easier to do business in commercial. Also, everybody knows all these things, right? They're all investors like you. So you speak the same language. You can talk about leases and options and all-inclusive trust deeds and all, get creative on things, carry back a note, and they speak the same language. So it's a different ball game at that, in that arena. And I don't know if you're in single family, so I hope that was relevant.
No, actually, totally multifamily.
Yeah. So that.
Thank you, Matt. I appreciate that.
Matt, you dropping bombs all day, Matt. Yeah, all kind of gold nuggets and diamonds you're dropping.
Yeah. Wait till I'll get some tequila in me, then I won't shut up.
Is it a secret?
Say Friday night.
we have masterminds once a week, so we have to send you out like a bottle of tequila, and then we'll just put you on live.
The smartest guy on radio, or however you want to say it, Joe Rogan, right? Always has his guests. He provides them drinks and loosens them up, and that's why he gets them to talk for all that time. If you ever watch, the guy, his interview guy, whoever's interviewing. Exactly.
Laughing. Oh man, it was great, man. Thank you so much. All right. So before we end the night, I want to say thank you all for coming, man. It was a great opportunity to meet all you all. I want to thank my wife Valerie for putting us on. She supported me a lot for this process. And I thank you all for being here. And the next step, I say stay connected. Like I said, I'm creating my own society. Inspired by Matt with a deal maker society. So I created apartment based society. You'll see that so that way we all can continue to learn from each other and build each other up. Okay. I will email you all. Look for an email from me or email me. So make sure that y'all have the access to the recordings. And get information there. If you got anything from me, I once again I appreciate all you all for coming and being with me on these 3 days. And anything else for my next event, if y'all want more speakers, so forth, let me know. Reach out to me. If you want to speak as well, let me know. We'll make it happen together, okay?
I want to say thank you too. Thank you, everyone. Thank you, Matt.
Matt,
really
you're
loving on
California,
you.
right? Matt, are you in California?
Thank you, Valerie, for putting it together.
Yeah, thank you, man. Yes.
Thanks, guys.
Thank
Thanks for
you.
having me.
Thank you,
Matt.
Cornelius.
Thank you, everybody.
Thank you, Valerie.
Thank you.
It was nice meeting everyone.
Yes, yeah. So make sure you put the information is actually on that site, so y'all connect with each other, stay connected.
And
Cornelius,
yes,
you were gonna send me the link to that for your page to go to that learning page, the Click Fund thing.
Say it one more time. Say it.
Click Fund, that page with your book.
Yeah, okay. Email me and I'll put all that and I'll put all that in the membership site so everybody have it. Just click it and you'll get the
okay. All right. Thanks.
All right. So make sure so give me till Sunday. So let me clean stuff up here and I can get all the stuff edited and I have it up by Sunday.
Okay. And one request, if you guys can make a comment, because I've always been really posting on Facebook, but there has been no engagement. Just really start making comments. That would really mean so much to us. And in that way, other people, we can bring in more people that we could really help. This was really, we really had a great theme platform that we created today. And we really wanted more people to come in and join. And, we got the recordings available. So that would still be, for people who missed out, and you guys have that. It's a resource out there. So thank you so much. Stay in touch. Whoever is not a member of Apartment Investing Secrets.
Look us up.
Yes, look us up. Matt, I'm gonna send you a friend request on the society so they can, get hold of you. So that would be great.
Look, Matt, Matt gets some great content. It's a free stuff. So I said, help him out, so forth, in his mission as well. Because I like what Matt doing.
Yeah, we love Matt.
What, Cornelius, I think Matt was like the superstar at the end. Like, you always keep the guy in the end. He comes in and he just beats everything up. Man, that guy was Matt. Like, he was like amazing. So great job, man.
Hey, Matt, you're in California, right? Matt, are you in California?
Los Angeles.
Yeah, okay. I'm going to send you a LinkedIn request. Let's connect because I wanted to talk to you about some project in California that I wanted to take it down. Nobody wants anything in California, so I'll have to touch base with you.
It's going to be a seller's market here. I mean, a buyer's market here soon.
I think that's a key to this. That's why my thoughts was, because I think when the market's changing, it's gonna be plenty of deals out there. So the question is, who have the money, the liquid enough to get it? So as we become great capital raisers, we can do deals all over the country among ourselves because we have the ability to do so. Because a lot of people are gonna get wealthy here, so why not enjoy this wave, right?
It's always, I always believe that America has always been the land of opportunities, and we have a big landscape. So it doesn't matter where the opportunities are, whether it is like today, HP is moving to Texas, or, somebody else is moving somewhere else. The one thing that is common that everybody needs to know is that a person needs a place to live. And that is what we do well. We find places for people to live and where we can make money. And that's the key. It doesn't matter where it is. There are hotspots. There will be people who will be willing to buy properties for like 4 cap, 5 cap, but then there is a whole lot of opportunities all around the United States of America where we can actually still make money. In very short thing I can say is the pie is big enough where we all can make money.
Hang on.
That's all I can say.
Get my
Amen.
phone.
Well said. Very well said.
Hey, Corneilous and Valerie, and the rest of the family and the support team, y'all did a fantastic job.
Hey, Vish, congratulations on your 2 deals.
Oh, thank you, Vinki. You did a great job, and thanks for presenting the deal to us.
Yeah, but now you guys have to invest to make it work.
I did my part. I gotta do your part.
I like that.
I did my part. I gotta do your part. Yeah. Ask not, you have not.
I need the moolah, not just.
You beat all of us. You're on deal number 3. We are still yet to catch up with you, Vinki.
You did 2 in one shot. You're awesome, man.
Well, the grind continues. The grind continues. It never stops. What do you say, Corneilous?
Yep, we all have our own dreams and ambition. We all have our own why, right? So we all doing for something. So it's like keep that in front of us because of, like I say, this real estate is only a vehicle to get to where we want to go. Matt, before we go, I think that she had a question about hotels. I want to make sure that Kelly, if she's still here, she had a question answered about she's raising money for a hotel. She had a question for you. Kelly, are you there? Are you gone?
Oh, sorry. Hi.
No worries. No, because I know you've been asking that question, so I will make sure that your question does get answered before we leave here.
I appreciate that. Matt, I wanted to know, it seems like you have experience, but it seems like your experience is mainly in multifamily assets. And I am actually actively seeking for a friend that I could team up with to help me raise capital for my ground up hotel development in Baytown area, in Baytown, Texas. And I don't know if you will have the contact or the network would lead me to the person that could help me in that area. And I know you guys are. I know everyone in this platform today is speaking about multifamily assets only. So that's what I was wondering, if you do have someone that can help me fundraise for a fee or an equity piece of the project.
So it's a hotel in Texas that you're looking for somebody to raise capital for you?
Correct.
Like do sales, right?
I'm sorry?
Like do sales? You want them to do the sales?
Yes. Yes.
Who's this? Take pictures. Who's this? Jane?
Well, I've never bought a hotel, although that doesn't mean I am against it. I try to just stay with what what I know. And but I will know that I will say that whether it's a hotel or it's an apartment building or it's a 7-Eleven or a plumbing company, the financials that you guys have learned to underwrite an apartment complex is it's the same thing. Same thing if you wanted to value Microsoft, you would just take all the income and all the expenses and you would do the same thing and apply some kind of a multiplier, whatever the stock price would be as a multiplier. So it's all the same thing as far as analyzing a deal. It just comes down to what your appetite is. Some assets are more safe or stable and therefore sometimes produce a lower return, and some assets are higher risk and therefore they should command a higher return. And hotels, depending on where it is, might fall somewhere on the scale there. As far as capital raising goes, if you're looking for just a salesperson or you're looking for someone to set up a sales team, I help people set up systems and processes for stuff like that, if that's what you are asking about. Other than that, if you're looking, other than networking, run an ad. Put an ad out on what are some of the ones, monster.com or something like that, and say
we buy apartments.
We buy apartments.
Huh?
We buy apartments.
No, honestly, especially in Texas, a lot of guys have worked for oil and gas companies. You can hire them, and there's restrictions. Talk to your lawyer about what your restrictions are and how you pay them. They're not supposed to be paid on commission without a license. But if they're an equity owner, it puts them in a whole different category because they're a partner. So you guys figure it out. I won't give precise advice on that right now, but I will tell you, if you run an ad on a job post, lots of people have lots of experience working for private equity groups, startups, raise capital for nonprofits. They're just salespeople. You give them a good product and put them on the phone with your list of contacts and have them call for you. If you're not excellent at sales, hire it out.
Okay. Yes, and I see my strengths and weaknesses in sales is not where I shine, and so that's why I wanted to really want to bring in an equity partner if that's what they chose to be, or pay them a fee for completion of the capital raise for this project. So that's what I like to align myself with, do something that I know that I like and good at, and want to outsource or get someone else that's shine in that area.
Where do you live, Kelly?
I'm in Houston, Texas.
Oh,
Okay. Is that where the hotel
Yes,
is?
the Baytown, Texas is like an hour from where I live, but it's in the metro area. It's in the Houston metro area, yes.
Yeah, I mean, you'll probably get 80 resumes of people that have raised money for oil and gas companies. If you post a job ad. Yep. I know we all think it's like this big secret thing. It's a whole industry. This is the biggest game there is. Private equity is the biggest game there is.
Okay.
The sky's the limit. The biggest companies in the world are private equity groups. And that's the game you're entering into when you start raising money. It's just a matter of what level you play on, right? You playing in the $5 million range or the $5 billion range, but it's all the same game.
Right. Okay. So you said I should do a job post in monster.com.
Yeah, if you're looking for a salesperson, I would put up a job post. Know exactly what you're looking for. Talk to your lawyer beforehand about how you're going to compensate them. Mm-hmm. Usually, if they're not going to be a partner, you're going to pay them as an employee, mm-hmm. and they can work for you as long as they don't sell securities for anyone else, mm-hmm. and they're an employee of your company. They should be able to do sales for you. If you want to pay them a commission, which is what most salespeople will want, no salesperson wants a paycheck. Make them a partner, give them a piece of the action, and you just can't incentivize them by the amount of capital they raise. That ventures into some securities issues that could get sticky. But if you do it with a good attorney, there's 900 ways around that problem.
Okay. And I heard you said, Matt, that you help with the system around this capital raising avenue.
Yeah, so I do as a consultant. I've helped people raise a lot of cash, a lot of capital. Sometimes I do that as for equity. Sometimes it's a straight consulting fee. But we'll take the deal, we'll analyze it together. We'll put your offering package together, put your marketing pitch together. We usually want to be involved with the lawyers, with the SEC attorney, to make sure that the deal gets structured properly. I mean, how do you know if you need to give the investors 80% and only keep 20? I mean, how do you know? I don't know. That's what you want. Those are the kinds of decisions you need to make when you're setting up a deal structure. How much do I have to give the investors in order for them to want to invest, and at the same time be compensated properly for the work, risk, and effort that I'm about to take on. Right. And this is a risky business. You have a lot of responsibility in raising capital. You have a lot of fiduciary responsibilities, legal responsibilities, moral responsibilities, and it's a lot of pressure. And I wouldn't, this isn't for just anybody. Anybody can do it, but a lot of people wouldn't want to.
Right. Right, and I've started out in residential real estate in 08 and 09, and not smallest scale when I raised, not really raised capital with people I don't know. These are more of my network, the circles of people I know in my industry where I came from. Yeah. And so I built relationship with them, and I know what you're talking about. They comes first. Their money, I protect their money before my money. And so, any decision I make, I always make sure I calculate my risk and the reward for their benefits first before mine. So I understand exactly what you're saying. And so I'm very cautious. And And I'm very, especially individuals that I built a relationship as a private and lenders up to this point. I've dealt with, so far I've dealt under $3 million so far for investors that I know in my circle. Now I'm jumping from that to $13 million project, ground up development. So I'm playing a different pool now, and I don't really know where. This will be my first capital raising, to people I don't really know. And so that's why I'm like, okay, I know there's a way to get this done. I just need to figure out where, and where I get the information, where I learn from people that's actually doing it already. So, and they're willing to help me, or, willing to direct me to get the capital. I know it can be done. I just need to fish in the right pond, if I may. So
Yeah,
that's where I'm at this point. I'm kind of have that obstacle from jumping from $3 million, being at this point about less than $3 million project. Now I'm jumping up to $13 million project, and now I'm stuck at where to get the rest of that.
Oh, so you're with financing, with leverage, you're if you're leveraging that $13 million property, you probably need to raise $3 or $4 million for your project, depending on, it's new construction, right?
Yeah, right.
And it's near Houston?
It is near Houston.
Okay. I wonder if they would, if it would be HUD approved. I know a group in Houston that does HUD projects, and they have HUD financing. I don't know if that would help you at all, but if that was something you want to hear about, and I could refer you over there to them. But HUD financing is, like I said, it's long-term, low interest. It's pretty. They have some pretty good deals out there right now about that.
If I understand correct, and I'll be grateful if you give me that contact and I can reach out. But if I understand correctly, HUD won't do any ground up project. They're more value add and turnaround project and whatnot. But I don't think they touch ground up development project.
We just did one in McAllen. It's a $37 million loan, new construction, 288 unit ground up apartment complex. And they financed it for 40 years at 3.15%. I've never seen a construction loan that ridiculously low, especially for such a long term. And most construction loans are due when the building's built. So, it converts into a long-term hold loan. It's incredible. And that's who I'm talking about, is like, if you can get a deal like that, they finance 85%. So it's 15% down on the development, 3, maybe 4% on the loan. The challenge is when you do HUD, it's all prevailing wage. If you know what that is, it's prevailing wage is if it's since it's a federal funded project, you have to pay federal scale to the workers, which is usually like double. But that's okay. So you work, a union contracting company would all those needs. And anyway, there's some opportunities with financing in that. I didn't know that they HUD did new construction either till I got involved with this deal.
Well, that's really great, because I don't know much about HUD. I do just a little bit about HUD that they do. It's, the amortization is huge. The HUD is the only one that have 40 years amortization, and everybody else, the MBS and everybody's 10 years in commercial. And so HUD. If HUD does, man, and I should have checked further into that. But yeah, this is great to know that actually HUD even touch new, ground up hospitality industry. So I
don't know about hospitality. That I did make that caveat at the beginning. I don't know if they'll do hotels, but they did do multifamily.
Okay. Yeah, I know they do multifamily every day.
It's a federal, it's a federal program, housing and urban development. Right. So their big idea is, hey, we need to. It's a way to subsidize costs to get stuff built that they want. So if they want a hotel, they'll finance it. If they want a office building, they'll finance it. And it's politically driven. You know, what does it look good for the Fed to be financing right now? And oh, well, we need affordable housing, multifamily it is. So that's, you know, that's the kind of thing, you know, because it is a subsidy. If you're getting 40-year loan at 3% interest, you know, with 15% down, that's subsidized every which way you could think about it from a true perspective. It's not because they, you know, just because they didn't write you a check doesn't mean they're not giving you
Right.
very favorable financing. But again,
Right.
it's all about motives. You know, they only do loan programs for stuff that benefits them.
You're absolutely right. You're absolutely right. And that is their mentality, and driven by the need and, you know, what they can provide for the greater goods of all. So
Yeah. I mean, there's also tax credits. I mean, there's a whole bunch of different government financing stuff, EB-5, immigration money,
Right.
all kinds of programs that you could go down all kinds of rabbit holes with. But, you know, $3 million, $4 million for a project, a ground up hotel, your easiest bet is going straight to like equity groups and bringing in a JV partner, you know, because they'll write a check for 4 million and you're done. Now, the trade-off on something like that is probably going to be they're going to want a higher percentage than a whole bunch of individuals would, you know. The benefit of having a whole bunch of investors is they are spreading the risk amongst themselves, so they don't need to have as high of return because their risk is lower. You got a guy writing one check for one project, he's gonna say my risk is I have 100% exposure and therefore I need a higher return. But if you got a guy that's gonna write a check next week, it means the deal's done and he carves out an extra 15%, you know, I don't know, 15% more than you were expecting to give away, but you don't have to raise money for the next 3 months.
absolutely, I do that deal every day.
Right, I know, me too. So you know, those are some options, and quite frankly, institutions that's about the smallest deal you're going to get that an institution will even look at. So 12 million, 13 million, it's about the smallest deal a real equity group, not real equity, but an established larger equity group is going to be looking at. You know, we mom and pop syndicators like us, you know, we operate in the $1 to $10 million range, and you'll see everyone in it just like you. You know, they either started out with partners and they've cashed them out and they don't have partners anymore, or, you know, I mean, it's nothing new under the sun. And, you know, it's kind of nice because you're in amongst peers when you're talking to other sellers and buyers and stuff like that.
Right. So I guess I'll talk with Corneilous about where I should find these equity groups. This is something new to me. It is fundraising with two people and groups that I don't know. It is brand new to me. I've been doing it with people I know in a much smaller scales. And now I'm jumping out to something brand new. And so when you say equity groups, even though you sound like you know exactly who they are and everything else, that's kind of like foreign to me at this point. But I'm willing, you know, I'm gonna learn it and see where exactly how to get into know these groups and be a part of this group and or get be a membership of these groups or something like that.
Sure. No, it's you know, the one thing is you guys are on the right. I mean, you're on the right track in this business right now. Look, there's going to be way more money looking for deals than there are deals available for the money, which means people are going to pay more and pay more and pay more, and the price is going to go up. So if you know, raising the capital is probably going to be the easier side of this business for this next phase as we go through inflation. The nice thing about real estate is it's a commodity. So the more dollars they print, the higher real estate's going to go.
Right.
Just not because the property's worth anymore, not because the value increased, just because your dollar's worth half as much.
The dollar's worth less. Yes, it just the dollars is deflated, and that's what people wanted to put into some kind of asset and just leave it there and on the mattresses, you know. And it's just the value going to keep on diminishing the way we going with this. So yeah, I know I understand where exactly what you're saying.
So the upside of that though is this, right? If you borrow $1 million today, when you pay it back 5 years from now, it's worth, you're paying it back with dollars that are worth half of what you borrowed.
Right.
So in this inflationary market, people are going to be rushing as fast as possible to get into real estate and leverage it as hard as you can, because the more dollars they print, the prices are just going to go skyrocketing.
Right.
And then you pay back the loan with dollars that are worth less than the ones you borrowed.
Right. Right.
That's why countries manipulate their currencies. If China prints cash like it's the note tomorrow, because we owe them so much, they're trying to devalue our currency so that we can't pay them back with cheaper dollars than the ones we borrowed from them. It's a currency race between the two countries, and it's that's how the game gets played. So you can participate too.
Right. Absolutely. Yes. Yes. Okay.
Well, Keila, I think June made a comment in the comments for you, and also Sanjay said he's good at sales and marketing, so reach out to him.
Yeah, that's right. That's good.
Okay. Oh, great. Okay.
So June Gray said something about you, about what's his name, and also Sanjay Hedge, reach out to him. He's on the call right now too. But also, yeah, come back. So after this, every Thursday night we're starting a mastermind, a virtual mastermind. So feel free to come back, and we'll keep building up together. I thought you were trying to maybe. I know a lot of people in the apartment industry are buying hotels for hotel conversions, convert hotels into apartment complexes. But however, you're doing a new construction, so I would love to see how that goes, and even try to see how I can help you get it done.
Okay. Yeah, I understand. Most lenders are shied away from a hospitality industry right now, just because of what we just went through, and also the what the economy is heading to, the next few years here. And so, and all this is kind of putting a lot of friction into the hospitality industry with all the airline, with the pandemic and everything. All the travel people are like pausing traveling and everything right now. And so it is, but it's there's still area that if you, especially ground up, if you in place right now to know exactly the time it right to break ground to where you have that it takes a couple years from ground up to all the way up to get it open and everything. So if you time it right, when the time and you don't have the crystal ball, but you can calculate all this to close as you could to time it to where everything is travels is resuming everything, and there's area and location again is everything when we develop these projects. So it's still it's not ever gonna completely shut down in this industry, but there are area, and it depends on what kind of economy lodge or what types of hotels it is. It's also, and whether it's exterior corridor or interior corridor, it also dictates whether it's, people are investors are shy away from. Most of the time you're talking about this conversion, they're looking for exterior corridor, which is going away. People don't like to stay at hotels that can open the door out to just a security and safety reason and all that. And so those exterior corridors are now being bought by other investors and being converted to multifamily units and whatnot. So you said, yeah. So again, it's it's all depend on the appetites of the investor too, and even lender is also a lot of lenders are shying away from the hospitality industry. Some are just start getting back into the game recently, but most of them kind of shut down during the pandemic of last year, and just some are just started ramping back up again to help out with the hospitality industry, but still some are still closed up until waiting for more statistics. You can see whether the travel is going to resume and all that kind of stuff. So yeah, so yes, I really appreciate that you kind of expend the time to have me ask the question to Matt. I greatly appreciate that. And if you can, if I'm join if you help me invite to join the group that you guys are doing every week. If I understand correctly, you're doing the mastermind weekly. Is that what you're saying?
Yes, we're starting a mastermind after this. So we do a weekly mastermind. So you'll get an email and we
Okay.
kind of grow from there. So that way we can continue to grow our business together.
Okay, great.
All right.
We'll book Matt for at least 2 hours or 3 on a Friday night.
Better bring
Get
tequila.
tequila.
And bring tequila.
Bring tequila.
Virtual happy hour.
Yeah, that sounds good.
Yeah,
We did
Matt,
that
send
one
me
time.
your address. I'm gonna send you the best tequila, and we can just sit down and talk.
You have like a whole truckload of tequila coming every week.
There you go.
I'll be in AA before you know it.
And do we have your contact information?
I think we put my email and did you download the book? Because you'll get an email from me and you can just email me back there. I'll give you that. So you guys will get an email from my
Is it a
stuff.
downloadable book or
Yeah, it's-
physical?
It's a downloadable book, but Matt, check out his emails. Matt's the only guy I know that actually replied to support emails.
That's
Because of COVID.
Yeah, I mean, because every time I support from Matt, it's all Matt. Hey, what's going on? I'm like,
Yeah, I put my customer service hat on.
Hold on. Let me talk to the manager. Hold on, I got you.
I don't know how the hell to do that, Cornelius. Give me an hour. I gotta call somebody.
That's how you do it. That's how you do it, man. Good stuff. Yeah. So, his book. You see, Matt gives some great value, so I think his book will be amazing. I'm getting it now. Speak. Thank you all again.
Do you have a physical copy, Matt, of a book?
I have one on Amazon, but it's a different one. This is a free book on acquisitions.
Okay.
Okay.
I have a book on Amazon called Dealmaker Manifesto. I wrote a few years ago. Just in part, it came up because Kelly brought it up a little bit. She's talking about the market in hospitality and how banks aren't so excited to finance it because of COVID and because of this and because of that. That means it's a great time to buy existing hotels. My friends here, I was talking to a few of my buddies here in LA, and I said, I haven't really marketed to do deals in LA for years. I've been doing deals in Arizona and Texas for a long time, and there's a new market coming up, right? It's going to be a big buyer's market in LA because people are leaving, and I'm not saying I need to buy and hold, but I'll make tons of money on transactions, buy, fix them up, sell them, whatever, all that stuff, flip and stuff. But you want to, what the conversation was that I just had this last week was, what's the next hottest asset? Right? Hospitality was one of the first ones that came up. Why? Because they were hit so hard you guys know, we underwrite on the numbers last 12 months. This is a buying opportunity for restaurants, hotels, everything that got hit hard. The thing is, when you're underwriting these things, you add a few years of cash flow to your budget. That's it. And you buy these things and you wait it out. Because you know what? I was in Vegas last weekend, and I'll tell you what, every cab driver in town said the weekend before was a record number of people came. They have flights from the Midwest there's someone $17, a guy was telling me at the pool, $17 to fly from Cleveland to Vegas. Hospitality is not going anywhere, but there probably is going to be some people in trouble this year because of their operations last year, and that's a great opportunity to get into. Restaurants. I think retail is a dead horse all across the way, just because of Amazon and everything. But restaurants are going to come back. Hotels are back. Office buildings. I know there's Zoom, but people are still going to want this stuff. So think about it from a contrarian standpoint, and think about when people are afraid, that's the time to buy stuff. And that's I'll leave it at that, and I'm gonna go have a drink. I'll see you guys.
No worries at all. Thank you, man.
I'd love to come back on one of your Thursdays, or a few of them. I learned so much from you guys, and just having to say all the stuff I already think about helps me learn it all again, which is important for me.
Indeed. Real quick, everybody, I want y'all to actually feel what's going on right now, right? Matt just spent a couple minutes to give us some great value. Now, imagine he has something to sell. We all will want to buy his item or give him money. So I'm saying that's the power of raising money by just giving value. People want to give you something back in return. Like Matt gave all this stuff. We feel like I owe you something. Give me something I can give you money for. I throw money at you. So as we go on our capital raiser journey, understand that because we feeling it right now. I feel like giving him something back because he gave me something. It's like a compliment. You look good. No, you look good. No, you look good. No, you look good. So it's the law of reciprocity. So as we start giving, people want to give back to us as well. So as we go on our journey of raising more capital, understand how can I give more? Then the more you give, the more you receive. I think that's a trick of the whole matter. As apartment, Cabaret Secret reveal. That's it.
You're right about that.
All right. Thank you all, man. I'll see y'all.
Thank
See y'all later.
you.
See y'all next Thursday.
All right. Good night.
What email from me?
Bye-bye.
Catch some tequila coming your way.
Bye.
Bye, guys.
Make a comment on apartment investing secrets, the page,
Yeah,
so we can
if you
have
see
some
if you see any of our posts on Facebook, on LinkedIn, please make a comment so that way we get more traction and we can use it as testimonies for next one. Okay. Thank you all.
Absolutely.
Thank you.
Am I connected with you on your page? I think so, right?
Well, any post you see about it, just any post, we'll see it.
Yes.
Facebook tell me any post.
Vinki, thank you so much. That
No,
was
thank
really
you so
amazing.
much. I made fool of myself today a little bit, but it's okay.
No, you did not.
prepared.
I was actually really impressed. I think that's the professor in you. You're having to present yourself like confidently. I mean, if you think that you did not project that, because you project confidence and you were able to really present the information. You were well versed. You know the content of it. At least that's how I received the message. So you did a great job. So thank you.
Thank you so much. I didn't even open the presentation because I was busy with my own meetup today. I had it on the market analysis. I jumped off that call. I jumped into this call. Like, okay. But it's okay. It went well, I guess. A couple slides were missing. I would have added those, but I'm gonna do that now. I'll add those. But thanks for giving me the opportunity to jump in and just bring the deal to everybody, That was
Of
good.
course.
If you want, do you have the that file to that presentation? Do you have it? You have the PDF or the Google Drive?
No, this is the PowerPoint. Yeah.
Okay, no, about to say, if you didn't have it, I have it because I don't want who created that.
No, it is. I did not create it, but the thing is, those slides were missing in there, right?
No, I'm saying I created that slide deck.
Yeah, I know you created that.
Yeah,
slide.
I was like my picture on it. You see my picture?
No, when I got the slides, your picture was not there.
No, I'm saying the one you just showed, my picture's there. I'll show you. Like if you look at the one with the map view, the right hand corner I'm still on there.
Which, let me share my screen. Hold on. You're telling me where is it? I added this now.
All right, go down. Go to the on the map.
This one?
That one too. Go back. Go back. You see the right top rank? Go to this one. You see it better right there. See top right hand corner? You see me?
Right.
You see me? My picture?
Right. Yeah, I didn't even notice that.
Yeah, I know. I knew it. So all of them like that. That's me because I did it. No one knows but me. I did this. Okay, it's mine. Yeah.
Those are your slides, man.
Yeah, but it's okay. It's okay. So I say like I let you do it.
It's all your fault that you did not add the slide for the
My fault. My apologies. I should have did it. My apologies.
If you had done that, I could have explained it so well. So
Man,
it's like,
thank you all out for coming out. Please come. I'll see y'all next Thursday. Okay. Look for an email from me. Or email me. Corneilous at Apartment Investment Secrets. Apartment Investment Secrets. Look for it. Let's stay connected. Let's grow this thing together. Okay. Thank all you all. I love all y'all. I wish all y'all well.
that was really nice, Cornelius. Awesome.
Thank you
And
so
Valerie,
much. Thank you.
Every last one of y'all. Thank you, going.
Love to all of you.
I love to meet all y'all personally.
Yeah, no, I was just saying, Valerie, you look so pretty.
Kathy.
Thank you. Hi, Kathy. Kathy finally showed up.
Pablo, good. Thank you for coming, man. Thank you for coming, Jared. Thank you. Thank you, Keela. Thank you, Keela, for sharing. Thank you, Ken. Thank you, Lois, for coming.
Yes.
Thank you, Gabe. Gabe came staying through. Vesh, you come through as well. June, great. I see you kept texting. Thank you for your input.
Yeah.
Nobody wants to leave. Everybody's still here because
I know. But Zoom cut us off.